All right, on page 95, chapter 3, adjusting the accounts, we have 4 learning objectives. Number 1, explain the accrual basis of accounting and the reasons for adjusting entries. Prepare adjusting entries for deferrals. Number 3, prepare adjusting entries for accruals. And number 4, describe the nature and purpose of an adjusted trial balance. All right, so what is the time period assumption?
Quarterly
Okay. Yeah.
Just basically saying that the economic life of the company can be split up in artificial time periods.
Yes. It means that we can divide up our business into periods of time based on our business cycle, right? So the best example I have found for this is if you are in agriculture, right? If you harvest. So after you harvest, you're done. So you start the next business cycle, right? You start all the preparation work for the next harvest, right? And then you have the actual harvest, and then it's over, right? So that's when, do you guys need to step out? Okay. So that's how we can break up into a set amount of time our economic life. Think about retailers, right? After the holidays is usually when they end their business cycle, because that's when everybody goes in the Black Friday, right? Everyone usually follows that cycle. So that's the time period assumption. Why do we need that? Why do we need time periods?
to show the growth or the not growth of the company in that time period, in that time frame.
Okay.
Show trends.
Yeah. If we never had time periods, it would be really hard to issue financial statements, right? If we just kept going on and on and on and on and never issued a financial statement, we'd never be able to report how we're doing. We'd never be able to evaluate how we're doing. So we need time periods so that we can break it up, issue our financial statements, evaluate either as an internal or an external user. Okay, we have fiscal and calendar years. I'm in the middle of 96. What's a calendar year? That's what we all know, right? January 1st to December 31st. What's a fiscal year?
Usually you can do the first day of the month and then 12 months later on the last day of the month.
Yeah, it's any 12-month period that you choose, right? So like my agriculture example, if you're in ag, your fiscal year probably follows your harvest. So what is grapes? When do you harvest grapes? August? September?
Depends on the grape.
Depends on the grape. We have a connoisseur in the class.
I like grapes.
Okay.
I've grown some in my day.
Nice. So let's just go with September. Okay, so say we are done with our harvest through September. So September 30 would be our year end. So our year would go October 1st to 9/30. That would be our fiscal year. Can be any 12 months that we choose based on our business. Doesn't have to be a calendar year. Government is all September 30. Yeah.
Is that dictated somewhat when the business initialized too?
It can, yes. But you can file a short year tax return to get on a correct year. So say I start my business now in February, but I want my year to go only through June. Then I would file a short year return through June 30th. And then I would get on a July 1st to June 30 year. All right. I have a feeling this next paragraph is where most of you just kind of glazed over and said, oh man, I thought I was through the worst with debits and credits. Nope, you hit me with another one. What is accrual basis accounting? Besides something you don't understand, what is it?
Using the transition to financial statements from the
Okay.
period that happened.
Accrual-based accounting is we record transactions when they happen, not when we receive the cash. So you know how we've been saying on account? We provided the services on account. Means we don't have the cash in our hand yet, but we provided the service. So the economic event happened even though we didn't receive the cash. That is accrual basis accounting. We've been doing accrual basis accounting. You didn't even... We provided the service, but we don't have the cash yet. Right? Anytime an economic event happens, we record it, whether we receive the cash or not. That is accrual basis accounting. Okay? If we only record the transaction when we receive the cash, that's cash basis. So instead of saying January 1st, provided services on account, that would be the accrual basis entry. If I didn't record that, but we got the money on January 15th, I wouldn't record anything on the 1st. I would wait until the 15th and I would say debit cash, credit revenue.
So will we say, we did the service on this day and got paid for it on that day?
That is accrual. That's accrual basis. We record the economic event when it happens. The economic event was we provided a service, right? We now have claim to money. We just don't have the money yet. Okay?
When we're doing it cash, you just say that this is the cash, no explanation, it's just cash came here, cash went out there.
No, we would record the revenue only when we receive the cash. So we may have provided the service on January 1st, but since we didn't get the cash, we don't record it until we get the cash. That's cash basis. Right? We all operate cash basis, right? I don't work January 1st through January 31st, record in my bookkeeping for myself or my checkbook register as of January 31st, oh, I have money now, right? We don't operate that way. When we get paid on February 5th or whatever our time period is, now I got paid, right? We all operate cash basis because it does us no good to record that I got paid really or I earned the revenue as of January 31st because I don't have the cash to spend. I don't really care. But a business cares, right? It's important to know that I generated that revenue in the month of January because I'm going to report on it in a financial statement. That's valuable. That's an economic event that happened. When I get the cash, it's important, right? It's helpful because I need cash to spend, but it's not as important as the economic event that caused the cash. Does that help? We'll keep pushing through. I know this one is tough. Which one is GAAP? Cash or accrual? Accrual. Why? Say it louder.
You want to make sure your money is credit is right.
The economic event is the most important, not the cash, right? So when we generate the revenue and when we incur the expense is more important or more valuable information than when we paid the cash to cover the expense or when we received the cash for that revenue that we produced. And that's what's on 97. The revenue recognition principle requires that companies recognize revenue in the accounting period which they performed the obligation and satisfied it. Okay, so when we actually did the service is when we record that revenue. So I performed the service on January 1st, right? Even though I didn't get paid, I still need to report it in January on the 1st. Same thing with expenses. The utilities for January need to be recorded in January because those expenses were used to generate that revenue on the 1st. Even though I don't get the bill until February, I don't cut the check until February, the expense was for January. That is the expense recognition principle. I learned it as the matching principle. Can we say it again?
So if we accrued an expense on January 1st, on January 30th, and we pay it on February 1st, that would just be two separate entries in the journal?
Yes. Accrual basis has lots of multiple entries, right? Because we're recording the payable or the receivable, and then we're paying it or receiving it in a second entry. Whereas cash, it's just one entry. How many of you want to go on and continue in accounting? I haven't killed you off yet. Okay, so if you continue, you're going to take lots of classes in accounting. You're going to take your license exam. These principles will be on that licensing exam. Like, they never go away. These are the foundations of GAAP. These principles are like live by, breathe by. So this isn't something that you just have to learn to get through this class. It continues. Even if you're not going to be in accounting, if you continue in business and you want to be in business, these are very, very valuable. Most businesses operate on accrual basis. It's a departure from GAAP if you are cash basis. Yeah.
When would it be appropriate to go to cash basis?
If you don't have a receivable or a payable, if you don't allow people to purchase on credit,
So like, say like a store, a convenience store or something like that. I mean, some people do it, but not like,
Yeah.
like Albertsons.
absolutely.
Safeway.
Yeah. Well, they would still have payables, right? Because of the volume that they're buying from somebody else, they're never going to be paying cash, right? They're going to be getting deliveries and paying an invoice or a statement at the next month. Smaller cash businesses, yeah. But if I have receivables and I'm going to get a loan, I'm going to want to show all of my income, right? The more income I have, the more qualified or the more I will qualify for. If I have all of this income, oh, it's coming. Don't you worry. It's coming, right? Here's when their payments are due. Then I can say, I have all of this income. If I'm cash basis, then it's strictly the cash that goes in and out of my bank. That can make a huge difference for financial statement purposes and for loans and financing, right? If you work in a tipped position, I've been there, right? Waited tables. On one hand, you don't want to report them all because you don't want to pay tax on all of them. But it can bite you because if you want to get a loan, you have to prove that you had the income. But if you haven't been depositing it or reporting it, how do you show that you had the income, right? There's a point at which you have to just start reporting it so that it can count for you and not against you. Okay, so if we're living in this world where everything is kind of delayed, right? We're recording revenue at one time, but we're not really receiving it, or we're recording an expense. We haven't necessarily paid it. There's going to be times when we need adjustments. Page 98. There are two types of adjustments. There is either a deferral or an accrual. What are deferrals? Yeah, it means that the cash transaction happened before the earning or the expenditure, right? The cash transaction happened before we either incurred the expense or generated the revenue. Okay, so prepaid insurance, that's a deferral because we gave them the cash for the insurance even though we really haven't used the insurance yet. Same thing with unearned revenue. They gave us the cash, but we haven't done anything to earn the cash yet. So a deferral means we get the cash before the expense or the revenue. An accrual is the opposite, right? We have incurred the expense or generated the revenue, but don't have the cash yet. Okay, so all these journal entries where we've been doing on account, those have been accruals. You've been doing accrual basis accounting, you just didn't know it. So all of these times we've been recording revenue and they haven't paid us yet, that was an accrual. Anytime we were purchasing supplies or equipment and we hadn't paid for it yet, that's an accrual. Page 99, a trial balance with adjustments. It is no different than what we have been doing. It's exactly the same. Trial balance has no differences. We've been doing this already. It's just hard to teach you before you do it. Okay, bottom of page 99, do it number 1. Cover the answers in the book and work this out in your group.